JAE Chung, welcome, Blockchain People Podcast, unscripted interviews to the top minds in blockchain. How are you doing?
Good. How are you doing?
All good here as well, man. Big day for Bitcoin, isn't it? Market seems to be going up. Chipotle is giving away Bitcoin. Looks like a good day for everyone.
Yeah, amazing.
So Jay is the CEO from CryptoLocally. You are a P2P crypto payments platform, and that's very exciting nowadays because we don't see that many people covering that side of matters nowadays. Nowadays, people are more focused on NFTs, DeFi, although you do have a DeFi component to CryptoLocally. So for everyone that might not be familiar with what you do, please, can you give us a rundown?
Sure. So basically, we started CryptoLocally because even though P2P may not be the most well-known part in the industry, it's really important to sort of provide a gateway for those that don't have access through the typical means of getting crypto. And yeah, so basically we decided to create sort of a gateway that's accessible by everyone in order to acquire crypto and sort of get their foot in the door to DeFi. The DeFi part specifically, we have a finance wallet. We partnered with Idle.finance, and we essentially created an integration where people can earn yield and staking rewards on their tokens. And the finance wallet is fully non-custodial. It's just a way for us to let people not even have to use MetaMask to earn staking rewards.
All right. So can you elaborate a bit more on how this non-custodial part takes place? How it is that you actually make it possible to go around MetaMask?
Oh, yeah. So, I mean, I guess you could just think of it as like a super light wallet where the only functionality is to park tokens and earn staking rewards. And we do it because like it's easy to just connect with our peer-to-peer exchange and just let people, receive tokens into the finance wallet and then click a button. Then they're able to earn staking rewards. And yeah, so the non-custodial part, we basically built it so that the user sets a finance wallet password. And it's sort of like a trading password if they were on like a brokerage account. So it's like a secondary password they use to encrypt the key, which is which owns the wallet, and therefore like there's no way for anyone, even us, to be able to get access to that key. Only the user has the decryption key for it.
All right. And obvious question here, but what happens if I lose my encryption key? I'm sure you have a good answer for that.
Yeah, I mean, we tell users to back their key up, basically, so that they have it with them in the beginning. But if they don't back it up and they lose their key, then they would lose their wallet. But that's the same with basically any other crypto wallet out there.
Right.
Yeah.
Well, it's the same with almost everything. And these days I've been hearing a lot about these social recovery wallets, but I'm not sure everyone's just ready to start introducing that. But are you thinking about that? Is that something you're looking into?
I haven't really heard much about that actually, so I'm not sure how that would work.
Okay, so yeah, basically, just introduce the concept as well for you and for those that might not know what I'm referring to. It's basically if I select a couple devices within my app, and I think the first one to introduce this was Argent, the Argent wallet, and within the app, you can select a couple other devices that you're authorizing to let you know back in if you happen to lose your seed phrase. So let's say I lose my seed phrase, and within the app, I added, I don't know, my mom, my sister, my girlfriend, and my best friend. I need at least three of them to agree for me to come in from a new device in order to access again. Which I think it's a decent feature, and if you have enough people on your social circle, then you're pretty much set for life for not losing your keys.
Yeah, it's kind of like a multi-sig backup, right?
Exactly that. And if people want to learn more about that, there's a very good blog post on Vitalik's blog, Vitalik Buterin's blog, vitalik.ca, I think, from Canada.
Mhm,
I
mhm.
think that there's a very good post in there about that. But all right, cool, man. So
Cool.
you introduced the DeFi part of the into the peer-to-peer payments platform. So how does this work? How do people stake? How do people earn rewards? How does your token work? Tell us about this.
Yeah. So where should I start? Yeah. So Give is a utility token on CryptoLocally that gives governance rights to people, so they can vote using Give, look through the proposals that are out there, and basically try to advance the ecosystem, and create good proposals that can, help CryptoLocally grow. It's also a discount token, just like with many other exchanges. So holding a lot of Give or paying Give, for discount coupons allows you to gain discounts for, trades. So there's a lot of utility there for Give. We also give out staking rewards in Give for people that stake their Give on the Finance wallet. At the moment, I think there's around 10% APY for, staking Give on the Finance wallet. And we also have staking rewards for liquidity providers on AMMs in general. But yeah, those are sort of the things that are around Give. Give really came out around, June 2020. We, started working with it, and, the token really launched on, September 2020 / October 2020. So it's been around 6 months since the token has been, widely distributed to the community. And, yeah, I think things are really picking up in terms of interest in the token, as well as, the community is really getting more and more supportive. So we're happy to see that, and we really hope to, continue making a lot of improvements, that will advance the ecosystem.
Okay, and as you introduce your own token, I assume that there's a lot that you have to take into consideration about how your users are going to react to a token like that, right? And how they're going to be interacting with it from a trading perspective. Because even if we want people to hold the tokens and use them for what they're supposed to be doing, in the end,
Mhm,
there's going to be some people trading them and causing the price to fluctuate. So how's
mhm.
that decision making process?
Yeah, so I think a lot of our, token holders, as well as, um, I mean, not token holders, our users / people that were really interested in crypto locally, thought that it would be a good idea to create this token. Our vision really was to give governance rights to the rest of the community. We wanted crypto locally to be more like a DAO instead of a centralized platform. The exchange itself is a whole non-custodial, smart contract based exchange. And, we thought that basically we wanted to, um, yeah, basically we wanted to give more power to the users, because it was in just the spirit of our platform. And, I think that was a big success. We also wanted to create an easy way to reward traders and reward users, but, that do things that help the community and help, make the ecosystem better. For example, like referrals get rewarded Give, and, many other things like trading, for example, gives you rewards as well.
And how did you manage to establish the base price for this token?
Um, I think basically, so what happened was we had a little bit of Give in circulation before we actually launched it, because there was a small airdrop, and, this was on Binance Dex. And, the token holders actually were trading it on Binance Dex. There was barely any volume, like there was like maybe a couple $100, but we sort of used that as a benchmark, I guess, to come up with the price.
Right, and that gives you sort of like a soft launch thing where you can micro test it before you go live.
Yep.
All right, and you're talking about these peer-to-peer payments platforms and Binance has its own P2P payments platform now, right? For people to cash out of crypto and in crypto. So Is there any big pressure when you're competing with giants such as that, or even with something that's very well established, such as local Bitcoin?
Yeah, so Binance and local Bitcoins are both custodial. So they kind of use a different technology. Our technology, it's patent pending, but we created a new system where you can trade peer-to-peer non-custodially, as in you never actually have to deposit crypto into the website. Binance, you have to deposit into the wallet. Same with local Bitcoins. And it's very different, as in so users who are okay with just letting exchanges take custody of their coins, like for example, with KuCoin, like there was a whole hack, right, where hot wallets were completely hacked, and we think that basically CryptoLocally, we're going to circumvent that. You don't need to pay transaction fees to deposit or withdraw at all because you trade directly with an escrow that gets spun up for each trade. And we're also sort of different in that we have an incentivized token mechanism for all the trading. So I think, along with Give, Finance Wallet, and the whole non-custodial nature of our peer-to-peer system, it's definitely a lot stronger in its offering. And I think we definitely, with this new redesign coming up, where we're going to actually relaunch the whole platform's UI UX, I think we'll definitely have a really strong peer-to-peer exchange platform that can compete with these people.
Right. And yeah, that effectively makes you a part of your own niche, right? You're not really
Yeah,
competing in the same market as they are because the functionalities and the security that you're offering are completely different. When
right.
you, I mean, when you see the current needs of crypto users, do you feel like a lot of people are in need for peer-to-peer payments, are in need to use this? Can this be replaced by payment processors? Is this a completely different thing in your mind, or who's the sort of user that you have in mind for crypto locally?
Yeah, I think it's a very different offering. The main reason being, um, I think a lot of people sort of don't realize this, but around 2 billion people in the world are still unbanked, which means they don't actually have like access to the typical on-ramp platforms for crypto that we normally imagine. So, like in developed countries, everyone has a bank account. Everyone could connect their bank account, get verified. But a lot of these emerging economies that we're working with, like for example, Nigeria, um, it's actually very difficult. They don't have a bank account. They have like a mobile app basically where they can use that they can use to move money around. And a lot of the times, like this is sort of the only way for them to, you know, um, even pay other people. So building a peer-to-peer platform like this is super important because it sort of bridges that market gap that exists. And a lot of people that just simply can't access it can access crypto by simply just finding another person that has crypto and then sending money via whatever payment method they want, which could be even like PayPal or in Africa, M-Pesa. There are lots of these mobile-based payment methods coming up that really increase access for these people.
In an economy such as Nigeria, like you were mentioning, or in an economy that's undergoing these kind of things, lots of unbanked people. By the way, we have a very good episode on the unbanked featuring Noah Lope, for everyone listening. And yeah, you have these people that are unbanked and these economies that are very different as we might be used to, even in more advanced, say, emerging nations as compared to the ones that are just getting started on financial inclusion. How do these people get their hands into some Bitcoin to begin with?
Yeah, so I think basically with these countries, there's less trust in their fiat currency. Moving money around is very difficult. Remittance is difficult. And because of this, like crypto is sometimes more preferred than fiat. The issue is that it's hard to access. So sometimes like people are paying 30, 40, 50% premiums to buy crypto above market price because they simply just can't get like a direct access to it. So I think there's actually more demand in these countries and actually a lot of use cases for crypto in these places.
And does the demand manage to amount to a big volume, or is it a big demand but for low volume?
Um, so I think, yeah, like a lot of them normally do small trades at a time, like normally less than $100. But once a community is sort of bootstrapped around like peer-to-peer trading, it's actually a lot of like self-sufficient, continuous volume that comes from them. And I think that's powerful. And they also bring a community with them. So yeah.
Right. As I was anyone that want to do this at home, you can go to the CryptoLocally platform and see all the different countries where people are using it to offer P2P payments and transactions, and you can see that they're from all over the world. So how do you manage to get your foot on the in through the door when you're coming into a new country, or are you just hoping that this happened through internet, word of mouth, or what's the strategy here?
Yeah, so our strategy is to create regional communities. So at the moment, like our Telegram communities, we have like a Telegram community in each country, essentially, or like each market that we're really focused in. So we have community-led Telegram groups in the Philippines, Indonesia, Nigeria slash Ghana, Arab. There's a lot of Telegram communities for crypto locally that are really active, and essentially we're trying to grow those communities and get them to help market us via word of mouth. I think the token marketing has been very successful because it attracts people, and it gets them to really think about really understand and examine our project. And we're also working with KOLs and marketing firms in general to continuously get new exposure and just classic crypto marketing there. But we're working on really all fronts and trying to continuously gain more hits on crypto locally and trying to grow our user base.
Is there anything that has surprised you or that you were not expecting when you were kickstarting or bootstrapping these communities with nations that one may not be so familiar with?
Mm-hmm. Yeah. Um, sorry, could you repeat that?
Yeah, of course.
Yeah.
Were there any surprises when you were, let's say, bootstrapping an Arab community or a Ghanaian community or a Nigerian community, when we're not
Yeah.
used to
Yeah.
dealing with people from these countries as much as we should?
Yeah, so I think for that, like getting Give out there was really important because people got attracted to the token. Then people also wanted to become ambassadors and really wanted to share crypto locally with their own regional communities. So I think that was super important for us. And once we had a couple ambassadors that were sort of leading the train and anchoring that movement, it was a lot easier for us to bootstrap those communities.
And when you're talking about ambassadors, how does this work? Do you have an incentive program for people to become ambassadors? Maybe if someone's listening somewhere and they would like to start doing it,
Yeah.
what does it take, or how does it go?
Yeah, so we have a crypto locally ambassador program. And basically we give people incentives, rewards, and so on for helping us, and some swag as well. So I could share that link with you later on if you want to share that on a link or something. But yeah, we have a ambassador program open for anyone to join. And it's very open, public, and we really want to just add more people to the community and grow together.
Right, of course. We'll have the link down here in the description box to whatever you're listening to this or whatever you're watching it. You'll be able to see it. And I mean, I'm
Right.
myself a very big user of P2P. I've backpacked a lot in my life. I've traveled a lot, and as such, sometimes you're just like without a bank account, without the possibility of opening a bank account, and going crypto P2P is the easiest thing you can do, and it's really a relief for even for nations like Argentina, where I currently live, or like Venezuela, that have these impositions on their local currencies and their exchange with the other fiat currencies, stronger fiat currencies like the US dollar. You just manage to get much more out of your money and access
Yeah.
even you would say a fairer economy when you're using crypto than what you would get with the local currencies, and that's even without factoring in factors like inflation, right? So have you noticed that these countries play a bigger part in your P2P base, or is that something that hasn't crystallized?
I think, yeah, like we're definitely sort of starting to see which markets are very like actually really interested in peer-to-peer. And like there's a bigger use case in these types of countries. At the moment, like we're trying to not diversify or focus too much on all like global markets at once. Although we're trying to, set up regional communities. We are trying to focus our marketing efforts right now in African countries and Southeast Asia and like those regions in general. South America, like we definitely have a lot of interest, but we haven't been able to really capitalize on that market just yet.
Right. And yes, speaking about P2P and speaking about emerging nations, is there any regulatory things that you have to comply with before going into a new market? Because I imagine the regulation for a system such as yours, where people are paying each other directly, but going through an escrow and doing an other payment, maybe offline or off platform. How does these, yeah, what kind of pushbacks do you face, or what kind of regulations do you
Yeah.
face?
Yeah, so we are non-custodial. We don't take custody of assets. We also don't really look at the fiat payment side. What we do is we do transaction monitoring. We have our own AML policy, and essentially we're working to get licensed in countries that so that we can operate fully in those places. So we're working on licenses in all these different countries at once, which are definitely costly, but I think it's worth it in the long run. And we definitely want to stay compliant with all the new regulations. And that's why like South America is a little difficult. I think some of the laws slash some of the government um, like regulations and just the relationships with other countries in general, it's a little difficult for us to be operating there. But yeah, so that's why we're trying to start by getting licensed in the regions that we're really focused on.
The right, I mean, the right regulation can make or break a project like this, right? Or
Yeah.
the amount of pushback that you can get, and suddenly it doesn't look like there's ever going to be as much pushback against crypto, at least as there was back in the day, right? All of a sudden
Yeah.
everything in this panorama helps. It looks like it's helping adoption and that it's helping everything get bigger. You see big news every day, and you can just wonder, are the banks ever gonna keep up with us? Are the people that are offering traditional financial services ever gonna keep up? Because you're offering a 10% annual yield, right? That's something that a bank cannot even dream of doing right now. So how do you see this
Right.
battle happening, or do you see them ever trying to do something against us?
Yeah, I mean, I think I don't think it's really. I don't think crypto is going to end banking at all. I think there's definitely a world where both can exist and both can thrive. Um, I definitely think that right now, DeFi is getting especially attractive to even normal people just because of how the US dollar, basically you can earn no interest on it by keeping it in a bank account versus instead getting crypto and earning staking rewards or yield using crypto. So I think we're at a really interesting phase where there's more and more adoption happening. But I think it's still too early to say that, you know, crypto is going to completely take over the world and finance, traditional finance as we know it, is going to die. But I don't think it's like a zero-sum game in that way. I really think that crypto is actually pushing the frontier outward, and it's going to create new markets and basically build a bigger economy can be imagined right now.
So you definitely don't believe in 10 years from now we're all going to be living in Mars and trading Dogecoin?
I mean, that'd be really interesting, actually. I wish that happens.
Yeah, that's a future we can only dream of.
Yeah.
This Elon Musk. So I'm wondering here, you're offering staking rewards, and that's something that most people are doing these days, right? Most companies, most platforms are offering these staking rewards these days. How do you deal with that? How do you make sure people get paid? How do you make sure you have the liquidity to generate enough to pay rewards? Does this build pressure, or is there something we are not completely getting in this picture?
Yeah, we basically put like the staking rewards into our whole tokenomics from the very beginning. We planned it out so there was an allocation for staking rewards. So staking rewards aren't going away anytime soon. We have enough tokens to, you know, continuously provide staking rewards with. It's not like massive enough so that the staking rewards will, you know, cause a downward, you know, price movement all the time. And I think really the community is still in the early phases, so it's very important to incentivize them to get involved and stake and provide liquidity.
Is the token supply infinite?
It's finite, so it's capped at 1 billion, and the circulating is right now around half of that. Vesting for investors is going to end in a couple months. By July, it's going to end, and after that, it's just team vesting and so on. So there's really most of the tokens are going to be out there very soon.
And I mean, in my mind, I cannot help but take a platform like yours and compare it with Binance P2P or local Bitcoins. Those are the two that I know best. And I noticed that you offer a lot of, you allow people to do payments in a lot of currencies. Quite a bit actually. You see that, well, local Bitcoins directly doesn't do that, and Binance has a more limited number of coins. And do you see any other reason for people to be paying each other in cryptocurrencies as much as one would hope with a big catalog? Is there a big enough demand for that, or is this just something people do because of the fees, or because they happen to have some coins laying around for this and for that, or what does the data tell you?
So I could sort of walk through the coins that are super popular right now. Ethereum was one of the most popular, but because of gas prices, it's gone down, which means people are actually wary of the fees and care about, you know, cheaper transaction fees. Similar for Bitcoin, but obviously Bitcoin is still the number one because normal people are most interested in starting with Bitcoin. Stable coins are also
normal
very
people
popular because
not as weird.
yeah, stable coins are still very popular because it allows a less risky way to start getting into crypto. The altcoins that are super popular are like Wax. Wax is a chain, EOS.io based chain for NFTs. And it's been really doing well recently. And it's been one of the most popular coins traded on CryptoLocally, just because I think we basically created one-step gateway to getting Wax, and not a lot of other places have that because Wax is an altcoin that's not listed on any major exchange. So just because a token is less popular doesn't mean there could be a big community around it on CryptoLocally. We recently launched Solana and Serum. Solana has gotten a decent number of trades. Tron also does, and EOS does. And Dogecoin actually gets a lot of people sort of trading, but it's all like tiny sizes, like $5, $6 worth of Dogecoin. So that's very interesting. So yeah, like it really depends on the coin, whether it does really well or not when it's part of CryptoLocally. And I think what really matters is the community behind that coin sort of gets interested and starts their own sort of peer-to-peer trading group around it, and then it really manages to take off. So next steps, we're actually working with Web3 Foundation and Parity Tech to try to get a Kusama and Polkadot integration as well.
Why do you think if this happens, that you have a lot of DOGE transactions, but there's only tiny amounts? What's happening there?
Sorry? Oh, yeah, I think it's just a lot of like people don't really know how to buy Doge easily, especially if they can't get onto Coinbase.
Right.
Especially for US people. So and they're all just trying to play with like it's not a real serious investment. A lot of them. So they're putting in tiny amounts just to see if it goes 100x or something.
What do you mean Dogecoin is not a real serious investment? Okay. Well, one would have a lot to say about Elon Musk's crypto, Twitter, everything that's going on with that. But what goes through your mind when you see these companies such as Tesla announcing that they're going to be taking payments in Bitcoin, and now, well, Chipotle is not accepting payments in Bitcoin, but these starting from today that they announced that they're going to be giving away Bitcoin, one can only imagine that might be the next step, right? So yeah, what goes through your mind when you see all this?
I think Bitcoin is actually not the best medium of exchange. As in, like, using Bitcoin to pay for stuff just feels like I'm paying for things with like stocks, right? Like it's not something that people normally do, and I don't think that's really the game changer for Bitcoin. I think the game changer is the technology behind this whole space. DeFi and NFTs are two really big anchors right now, and two big use cases that blockchain and crypto has found. And I think it's only like more infrastructure is being built, more protocols are being built, and I think that's really what's going to take the industry to the next level. I think Bitcoin is going to continue to be there. It's an amazing store of value. It has guaranteed scarcity, so I think that's why Bitcoin is not investment advice, but Bitcoin is a long-term good bet. But I think really what's going to drive innovation and drive advancement of the space is the technology itself.
Dude, I didn't want to talk NFTs today, but since you touched on that, what is the why do you see them being a valuable use case for blockchain technology? And I'm assuming you mean NFTs as the whole technology and not just the crypto art that we're seeing so much these days.
Yeah. So I love crypto art and collectibles. I think it's great. And NFTs definitely have a use case there just because, it's verified scarcity again, transaction records are publicly viewable, and immutable data if you configure it correctly. But I think what's really interesting is at the moment, NFTs sort of have a ceiling to value. Like a singular NFT it could get extremely expensive. We never know. However, it's sort of has a ceiling as a collectible or an art piece, right? But what if we sort of changed NFTs into financial options, where you wrap tokens into NFTs, or you wrap options into NFTs, things like that, where you're sort of mixing DeFi with the NFT tech. I think that's sort of where a lot of interesting things can happen in the future, where the ceiling that value of a single NFT could really skyrocket. And in general, I think NFTs are a great way to transfer value because it's a really efficient way to transfer data and metadata using an asset between one party and another. So yeah, I think it's very promising, the technology, and I'm really looking forward to building on it and seeing other people build on it too.
What do you, because I do not immediately see the benefit in this. What do you think the benefit would be in, say, having an option issued as an NFT?
Yeah, so as I said earlier, yeah, one thing is that you can basically retain more data with an NFT. And therefore, something that you can't do with just a normal ERC20 or fungible token, you could do with NFTs. Another thing is, so I'm working on another stealth project right now as well, and essentially, like, the idea would be to tokens that haven't actually ICO'd yet or IDO'd yet. What they do is they wrap tokens into a SAFT, right? And it's a legal agreement where when you're doing a pre-sale, I tell you, boom, you get this price and you get 12 months vesting. You pay me now, and you have to trust me that I'm going to give you those tokens later.
Right.
And there's these OTC marketplaces where people trade these SAFs before the token even gets launched. And then people get scammed. Sometimes the project goes like, oh, we didn't sell these tokens to you, and therefore we're not going to honor this, and we're not going to give you those tokens. It happens all the time. And I just think it's so much better if you have an NFT that wraps that ERC20 token before it even launches. And later on, like, you could basically give that NFT to someone, that person can sell it, trade it with someone, and then they're still guaranteed to get those tokens because they can redeem that NFT back for those locked ERC20 tokens. Essentially, it's like a time-locked option / vested option for this token, right? And
Right.
yeah, I think that's something that's super interesting to me, and just the beginning of the types of financial options that you can create with NFTs.
Actually, well, it's a story time. This is why I didn't want to talk about NFTs today, because I just participated in this thing for Pokemon, which is like basically a knockoff of Pokemon, but from Polkadot on Polkadot. And it's basically, they were issuing this X, like the Pokemon X, right?
Yeah.
You would
Yeah,
apply with your MetaMask, pay with your gas fee, and for $9 transaction fee, you would get an egg. If that egg would hatch, you would get both the NFT of your dragon or whatever it was, and that dragon would allow you to access the IDO. So that was a pretty cool thing, I thought, because if your egg got successful, if you actually did get the creature, you would be able to participate in the IDO, but you would be able to trade it as an NFT before the IDO, before that thing actually. Just like you were saying, it was just like an option to participate in the IDO. I see a lot of value in that. Would you like to touch on the other project that you say you're working on?
No, I think we could probably do that another time.
Okay.
Yeah.
Always welcome to come back.
Yeah, sure. I mean, yeah, we'd love to focus on that other stuff next time too. But yeah, I mean, it was great talking about CryptoLocally here today.
Right, and since you're you were touching on how you see Bitcoin payments, such as like paying with stocks, right? I'm wondering here, what else do you think we can eventually evolve into for people to transact more easily? And here's the tricky part of the question: does it eventually render yourself a bit redundant, or do you think there's always going to be a need for P2P?
Yeah, so that's an interesting question. It's hard to tell. More and more as I get deeper into the crypto space and work in the crypto space, I'm realizing that any fiat currency or US dollar is kind of hard to trust, honestly, right? You have a couple people sitting around the table that discuss a couple times a year, hey, let's just print like a lot of tokens, basically, right? Let's print a lot of USD. Um, Eventually, a burger will be worth $100,000 due to inflation, right? There's infinite supply of the US dollar. Like, there's no cap to it.
Okay.
So I think in that sense, the US dollar is not the best store of value, but is it a good medium of exchange? I would say so, right? There's
Right.
liquidity, and it's cash is still a good medium of exchange, and therefore I think it's still a good currency because people agreed that it has value, and you can still exchange value. Um, Not even you don't even have to do it through giving someone paper and cash in person, but you can do this by using your mobile phone and just sending some money to someone. I think crypto is at the moment still less liquidity, more volatile. It's guaranteed scarcity for some cryptos like Bitcoin. I think it's a really good store of value, but at the same time, using it for day-to-day peer-to-peer payments, I feel like there's just way too much fees and slippage that comes into it and too much volatility, right? Maybe in the future there's like that changes, but at the moment I still see those as two very distinct products almost, or use cases. So yeah, that's sort of my thought slash headspace on that.
Right, and that kind of kills. It's a bummer, right? The more you think about this, it's a bit of a bummer because
Mhm.
originally Bitcoin was conceptualized as a peer-to-peer payment mechanism and something we would transact with. And
Mhm.
it has devolved over time into this thing that we use to store value. And it's not
Mhm.
even that good at that because sometimes it just goes down for 2 years. And it it's clear that the Bitcoin core team is aiming more to become a store of value, right?
Mhm.
What's I guess what I'm wondering here is where does this take Bitcoin? Is there a way to eventually cap volatility? Does this die whenever all the coins are issued in 100 years? Or yeah, how do you see the future playing out?
No, I think this is good. I think this is actually sort of what Bitcoin is going to really solidify itself as, and I think it's what it's going to become. I think it's sort of like gold, but it has different like we sort of know that gold is scarce and there's limit to the supply, but at the same time, like there could be more gold out there. Like we don't know. But for Bitcoin, it's like even better. We know exactly when it's going to stop. We know exactly how much the total supply is going to be, and it's less costly to transfer Bitcoin than to transfer gold. Um, so I think it's a pretty good alternative and a good hedge against the dollar. Um, but I don't think there really needs to be a sentiment that Bitcoin needs to become a payment rail. It's just I don't think that really makes sense unless we're talking about like Lightning micropayments. But yeah.
Right. And almost exactly, we know also how many more gold or how many more Bitcoins we're going to discover each year, right? Like we know with
Mhm.
certain certainty how many Bitcoins we're going to find each year. And that also gives you some perspective. Whereas with gold, you would have the mining companies playing their tricks in order to keep the value the same, even if they find like these huge reserves or whatever is they do, yeah, behind the curtain. Man, since
Yeah.
we're just preparing to wrap things up to finish the episode, is there anything that you would like people listening to this to do for CryptoLocally? To learn more, to get in touch, to become ambassadors even?
Yeah, I mean, would be amazing if they join the Telegram group, follow our Twitter, ask us any questions that you want. We do AMAs pretty often as well. So If people have questions, they can ask there. We welcome anyone to join our community and sort of really want them to sign up and check out the platform itself too.
Of course. And if you guys are watching this on YouTube and or Spotify or whatever it is, remember to subscribe, remember to like the episode, remember to everything you can do. Every bit helps. It really does when we're bootstrapping the channel. Man, I mean, I'm not gonna ask you if you're Satoshi or anything. I'm just collecting some thoughts here, but this is pretty interesting where we were with the Bitcoin thing, because it leaves one wondering, right? If your Bitcoin is not ever gonna be the method that we use for transactions, and if effectively no coin that's always fluctuating in value can be that, do you think we're just doomed to digital dollar forever, or what's the exit there?
That's a great question. Yeah, I don't think I know the answer to that question really. I think the major currency of the world has seen changes every few hundred years, right? As catastrophes or economic or historical, massive historical events happen. I think a really good article to read would be the one by Arthur Hayes on Medium, the first two that he wrote recently. Um, those are very good reads, and I think it definitely helped me shape a lot of my opinions around this topic.
Who was the name of the author again?
Arthur Hayes.
Arthur Hayes.
Founder of BitMEX.
Right. And can you just elaborate a bit more on what people can find when they go read them?
Yeah, I think he basically summarizes how the financial world works and how institutions basically have a clear-cut advantage versus retail in any financial sector. And it's basically built so that the institutions keep winning versus retail. And when the whole GME stuff happened, retail finally won a little bit. And then the institutions cracked down on them, right? So in crypto, he's saying at least we have a place where projects and companies that have a lot of funds still, even, they have to at least be transparent about their system and tell people what you need to do or what's going on. And if they don't, and if you're not transparent, then people really dislike you. So we have a community and we have a space where at least transparency is mandatory almost. So that's sort of what the first article talks about. The second article delves into basically his, I guess, suggestions on financial freedom and financial future. And also a very good, I guess, examination of existing asset classes and a good rating of their scarcity, their effectiveness, their fees, slippage, and all of that stuff. And basically it tells you crypto is a good hedge against the dollar. He talks about how real estate, has its pros, but also has major cons and so on and so on. And just like basically gives a walkthrough of how a normal average investor could approach sort of long-term investments too. So yeah, I think it's a great read.
Right. Well, it's really interesting. I'm definitely gonna be checking it out. And when you talk institutions, we were all happy, or we were all wanting for them to jump into Bitcoin back in 2018, where it seems like that would be the only thing that would save the space, right? And nowadays, we're not at all that excited about them because it does look like they might be, well, eventually doing their thing like they did with GME, right? Like they do with everything else with the crypto space. Are you... What alternatives do you see in there? How do you see decentralized finance playing out against these traditional finance? Tough
Yeah,
question.
like
Yeah.
it's a hard question.
Yeah.
Yeah.
I'm just throwing the big
It's a
topics
difficult
out there.
question.
Sorry.
Uh-huh. Yeah. Um, I have very strong and like long opinions about this. But yeah, I think like even in crypto too, like still institutions have an edge. Like Alameda has an edge over all of us. When you trade on FTX, and you're trading massive amounts, they're going to trade against you. And I feel like just in general, that gap between institution and retail is so high in centralized and traditional finances, where if you're trying to invest in even an ETF, which everyone tells you is a good idea, that you have to do it, you have to pay spreads and fees to do that. And if you're not doing that because you're using an app like Robinhood, you are the product. It's not free. You're paying somehow, right?
Right.
So I was pitched a 60-40 moderate ETF product recently, from my bank, Bank of America. And I had to pay 1.6% a year in management fee for an upside of around average gains of 6% per year. Like what? Makes no sense, right? Like in crypto, you can get yields, right? Staking rewards of 10% easy. And you're basically having to pay these management fees and like you get charged massive spreads over 100 basis points to even invest in these mutual funds that are managed, but you literally just put it in an ETF. So that's how traditional finance works, and that's why institutions are always at an advantage, because unless your net worth is at least 10 million plus, you're not going to get better rates than that most of the time. So yeah, I mean, those are just my opinions around it. But yeah, I think I've talked enough around that.
Okay, no, it's great. It's great to have like the strong opinions. Those do way better on the clips, so it's actually good advertisement for all of us if everyone comes here and talks shit about whoever they want to talk shit.
Yeah.
All right, man. So I think I'll let you go now. We're getting closer to the hour of interview. Are there any parting thoughts?
Yep.
Are there anything else you'd like people to let people know about CryptoLocally or whatever it is you're also doing in the background?
No, I think I really said everything I wanted to. Yeah, thanks for having me here, and yeah, it was an honor.
No, thank you, Jay. Thank you, and to everyone listening, go to CryptoLocally, check out the page, check out the platform. It's pretty intuitive, and I think it's really great that people are building these platforms that are friendly. They don't look like a hot mess like local Bitcoin does. You can actually see the value in there. You can actually see what's gonna take this industry to the next level with the user friendliness and the well thought platforms. So thanks a lot for being here, Jay. An honor, and I hope to have you back here with your other projects pretty soon.
Great, thank you so much.
Okay, bye bye.